Can I get a let's freaking go? Let's go. Did you know? Look at this. Look at this news here. Stock buybacks jumped 6.3% in quarter three. So I'm going to go ahead and get into what the difference is really between stock buybacks, dividends, and other different forms of companies paying back their shareholders and see which one's better. But we'll look at this little news article real quick. S&P 500 stock buybacks rise to 175.9 billion. That's a lot of billow right there. Bill O'Reilly halting 2 quarters of decline. That's right. After lowering expenditures in the first half of the year from their tax-inspired record-setting buying spree of 2018, companies increased their share repurchases by 6.3% in their quarter. Okay, Howard Silverblatt. I don't know what that means. Silverblatt. That's the worst last name in the nation. I feel bad for that guy. For quarter four, buybacks are expected to stay near the 190 billion level, but fall short of the 223 billion set in Q4 of last year. The cumulative rolling 4 quarters of repurchase continues to affect EPS as 22.8% of issues reduce share count by at least 4% year over year. Quarter 3 dividends set a quarterly record, rising 6.4%. Love that. To 123.2 billion. Quarter 4 is set to notch up another record at 126 billion. Total shareholder return of buyback and dividends this quarter was 299 billion, up 5.2% from quarter 2, down 6.4% from quarter 3 last year. Top 3 buybacks of the quarter were Apple, which spent 17.6 billion. Bank of America, 7.6 billion. Wells Fargo, 7.5 billion. So, obviously, this looks like some solid news. There's no doubt about it. It's a fantastic sign. If you're looking at share price, if a company's buying back shares, typically it's because they believe their stock is not quite at fair value, or they're at fair value or below, let's say. And there's certainly benefits to both. There's several things that people can do with their profits. I'll say it that way. Companies can do a couple different things with their profit. In my opinion, there's really 3 ways that they can split up that profit. One, obviously, be reinvesting it in the company itself. So, spending for more payroll, whatever it might be, payroll, supplies, any sort of growth efforts that they might want to try. You have the ability to do stock buybacks, which is purchasing shares. And then also you have the ability to do dividends as well. So there's benefits to both. Personally, I'm more of a fan of dividends because they're a much more steady source of income. Dividends are going to be paid directly to shareholders, whereas these stock buybacks are a little bit different, and I'll get into why they're a little bit different. So there's a good reason why companies would choose buybacks over dividends. So buybacks are usually a one-time temporary type thing, where a dividend, you're pretty well setting in fate that you're going to be offering this dividend consistently, unless it's specifically announced as a special dividend, which, trust me, I like when they announce a special dividend. Any companies that you've had that have special dividends, it's lovely to see that extra cashish, baby. Let's go. So yeah, I'm more of a fan of dividends, but again, it sets that precedent for the company that they're going to be expected to be paying that out regularly. When sometimes profits may falter slightly depending on economic situations. Right now, profits are at a pretty high point just due to, again, lower tax rate for businesses, and we're seeing a little bit of a headwind from the trade war, and that's kind of hurting some of these profits a little bit. So it's going to be harder to sustain a dividend long term, potentially, depending on how long this trade war persists. So again, it's interesting. So what's the point of stock buybacks? I think there's a lot of real reasons that companies might do it. One major point I don't think a lot of people consider, which is what I look at in this, I hate to look at the negative part of it. It will increase share price, usually, and there's no doubt about it. Reason behind that is if the company's buying back shares, there are less shares outstanding, which means each share is less diluted, if that makes any sense. So the fewer shares, the more value that each of those shares has. If you look at it from an earnings per share perspective, which is how you usually rate how much a company's bringing in, it's a good way to look at valuation because that determines their price to earnings ratio. Their EPS or earnings per share goes up if there are fewer shares because of the fact that, again, you're dividing by your earnings over your shares. You're going to be dividing by a smaller number on the bottom there. So if there's less shares outstanding, your earnings per share will increase. And typically that leads to the stock value increasing as well. So that's really the main reason for it. The reason that most companies typically are going to offer a buyback as opposed to a dividend is, well, it's a little bit beneficial for corporate executives. So if you look at it, most corporate executives really get a lot of their pay from stock options, which if they're getting that as their benefits there, stock options you don't actually get dividends on. So if they have options in the stock of the company they are working for, they're not getting paid dividends for it. So it's going to be a lot more beneficial for them, especially like higher level executives. It's more beneficial for them to do these buybacks because it'll increase that share price for them, and those option values will increase significantly, as opposed to dividends where they don't really see that impact that much. You're not going to see share price go up significantly because of it. But with a buyback, typically whenever you're buying back these shares, again, it'll make the value a little bit better on those shares, and that's usually why you'll see a stock price increase a little bit more than usual in any given time period. So that's maybe why, Apple's had such a big run up in the past year or two, because of the fact that they've been buying back a lot of shares. Especially in the last quarter, they bought back $17.6 billion worth of shares. That's a lot of shares. So there's a little bit of a self-interest there for executives whenever they're offering buyback instead of dividends. So that is one thing to consider in terms of this. But in my opinion, I'm more of a dividend guy too, just because of the fact that I'm not necessarily looking for quicker capital gains, because I don't really want to. Most of the stocks I'm in, I'm going to want because they own it. They have a dividend associated with them, and I want to keep those long term. And this more incentivizes a little bit shorter term selling because the stock price is going to rise as a cause of this, as a result of this buyback. And I'm not necessarily looking to sell out of my shares. If it's a company I like, buybacks are fine and all, and I have no problem with any capital gains, but I certainly prefer getting dividends to selling a stock out that I might like if it gets too overvalued or whatever it might be. Typically I'll just hold through anyways, but still, that's really just the gist of the difference between buybacks and dividends. So buybacks, obviously, they're good for the stock as a whole. They benefit them, but they also have a lot more benefit to higher level executives, and that's usually why they offer these a lot more than consistent dividend. I personally would prefer them to increase dividend, or just, if it's a company that doesn't pay a dividend, start paying a dividend. But I think there comes a time in every company where they eventually mature and they start paying a little bit more of a dividend. You see it a lot in long-standing companies. As they grow and they get out of that phase of massive growth, they turn more towards being dividend payers, and that's what gets shareholders interested in their stocks. So you'll see it a lot more in the future with a lot of these bigger tech companies. Once they make it through, they're very profitable. In the future down the road, they'll have all that money on hand that they can start paying out dividends to shareholders whenever their growth starts to decline a little bit. And you don't see the significant growth that you see now, which, again, that's why I hold Facebook personally, because Facebook has the opportunity to be a absolutely massive dividend payer in the future. I think that'll be within the next 10 years personally, and I plan on holding this thing for the next 10 years. There's no doubt about it. Facebook is my baby of a stock, and it's the only stock that I think right now I personally want to get involved with because it's the only one that's not supremely overvalued. I think there's a lot of overvalued stocks right now, and I like Facebook, but that's another video. So hope you enjoyed, and if you need to know anything else, let me know, and I will give you my opinion on different things here. Thank you.